Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It's April 15th, 2023. It's the weekend update. It's a Saturday. As always, take a look at the pinned comment. You'll see a link for Twitter. You'll also see past videos for different asset classes and a view of cycles, some great training content in there, and also understanding swing highs and swing lows, which are literally the key to the market. Let's talk about natural gas here. This is your daily chart. And in our last video, we talked about how April was the most bullish month for natural gas. Typically, this was a potential swing low. That has failed. This swing low also failed. So we have a new potential daily cycle low candidate as of this Friday, day 36. Almost a bullish outside candle, but not quite. And of course, April isn't finished yet. So we could still see some kind of strong move to close things out. But I will reiterate, as I have in other videos, there are much better trades out there. Precious metals is in a long-term uptrend. Gold, silver, GDX, they are having a short-term pullback. That's all in the pinned comment. You can see those videos. Crypto, also in a long-term uptrend. Stocks, they do seem to have bottomed in October. Those are just, I think the risk reward there isn't as great right at the moment. But these are other better trades, higher probability. I am doing these videos just to help folks out if you happen to be stuck in this trade, for instance. But this is so far the characteristics for what you might, for, you know, as good a candidate for a reversal as you're going to get. For a few things, this is basically a double bottom. So this candle of this candle, and it's a false breakdown, right? Because this low here is one spot 967, and this low is one spot 946. So like 30 ticks lower, just pierced this low and then rebounded strong to close the day as a pretty bullish looking candle. Yet you have some bullish looking candles within this ugly chop zone. I hope that's like pretty obvious. Look at this chop zone. Like we chopped for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Call this 12. So one thing is clear. The move out of this should be pretty violent, whether it does continue higher or we get a reversal of this, right? So if we are going to go higher, you know, we could expect a little bit of a burst, right? Again, doesn't mean it's the best risk reward trade out there. Now, that said, we could also, you know, plummet lower. The point is this like clear consolidation zone on the chart, you would think is going to lead to something that's going to be a little bit more meaningful. And so let's look at the weekly chart for some clues. Again, potential daily cycle low here on day 36. This last daily cycle rally lasted only 7 days. So it could be a really short one like that as well. Nothing to get too excited about. In terms of the weekly, this undercut that we had on the daily means we also have a new low on the weekly, because this had been a low that was holding for a while. And so now you think about this context, this is potentially week 23 of a weekly cycle. And so you could see a world where this is either our weekly cycle low or we're getting very close to a weekly cycle low. And so we could get a rally for a few weeks. Because again, think about it. Every weekly cycle low is also a daily cycle low. So if this is a daily cycle low, this, you know, reversal that started on Friday, then it's possible that it's going to also turn into a weekly cycle low. And in fact, important to note that we did close as a bullish outside candle on the weekly chart. Now, I just said we did not make it to a bullish outside candle on the daily chart on Friday, but the weekly candle did. You can see the low from the previous week. We dipped below it and we did get above it. Now, what I will say is we pulled back, and so we didn't actually close above the high from the previous week. So the high from the previous week is 2.197. So we did close below that. But that's going to be a level that you're going to want to watch for. 2.197 for the continued upside. And also, we have this downward sloping 10-week moving average. That's another potential target, even if we're going to get another reversal. But ultimately, any rally is unlikely to make it past $3. Like that would be your ultimate ceiling. Even that is obviously very optimistic. But just structurally, you could see it kind of bouncing, chopping around even inside this zone, and it would still be bearish. Maybe not as bearish as it has been. And more realistically, you know, you might find that, you know, we might find that there's, you know, trouble getting through like you know, anywhere from like here to like, you know, like you can kind of see a world where price is aggregated there. So you can kind of see how price kind of aggregated, you know, anywhere between like, you know, 2.6 to 5, like the 2.6 area and like 2.30. So, you know, that 30 kind of cent range. And so it's going to be interesting. I mean, you can see we kind of pulled back like right below that level. And that also kind of coincides with where the 10 period moving average happens to be, although it is sloping lower. So it's going to be lower, you know, as the days go on. And if you think about the monthly chart, important signal, it's still clinging to green right now, but like just barely. It opened at 2.085. So below that, this thing goes green again. And again, thinking about that context, the cycle context, the longer term, this is only is it month 32? So 27. So this is month 34. And so not super late in terms of a long-term cycle and not that long a decline because this cycle rallied for 26 months. And so it doesn't mean we have to plunge lower, but there's no reason why we need to see a V-shaped bottom sort of thing. Look at how these declines play out. They tend to take time, right? From you know, these arrows mark swing highs, and then you see these crazy long declines. This has been a decline of only 8 months right now. And I say only 8 months, but I mean, look at this decline. That's way more than 8 months. That's way more than 8 months. Doesn't mean it has to be, you know, they have to follow exactly the same pattern by any means. So let's look at UNG and BOIL, and let's also look at cold. That's probably getting a little exhausted. So UNG makes a bullish outside candle. I hope now, as you're watching the channel, you're learning these things, that you can see this on your own. Like, you don't need me to tell you that, right? Like, it made a lower low, and then it rebounded and made a higher high, a much higher high. So in this case, this did close above the high of the previous candle. I mean, look how it dwarfs it. That's why it's also the same thing as a bullish engulfing candle. So same kind of picture, potential daily cycle low here, and you can see same kind of idea on the weekly. And I'm assuming BOIL did basically the same thing. Yep. And so what you want to see, like if it's not obvious, you know, your like absolute line in the sand, like if you wanted to give it as much rope as possible, now is $2.99, because that's the low of this candle here. And that's obviously percentage terms a decent amount lower, but there's no reason for you to stay in this thing below that. And in fact, if you zoomed in on the hourly, I mean, you could even, if you wanted to be even more conservative, and that's the problem, this thing can trade wildly. You know, even a stop at like in the 320 area would be appropriate to just define your risk. And let's look at cold real quick. That one, you know, if we're going to get a little bit of a rally out of natural gas, you would expect that would be a little bit exhausted. Let's look at what the daily looked like. Right, so the daily gave us a bearish outside candle. So just like UNG and coal and BOIL had a bullish outside daily candle, this had the opposite, and it also closed below the 10-day moving average. So that's a sign that, you know, further sign that that might be our little daily cycle low here. Now the catch is there's no way to know how long of a rally you're going to get out of it, obviously. And finally, let's look at LNG, which is a derivative of natural gas. It's a, you know, natural gas producer, right? Because it was showing bearish signs of having topped out here, and then and now it's made another top here. Let's see, what is our count on this thing? So let's just get a good count. Let's just get a good count here. So that's 8 days. That's day 17. And we're right now on day 37. Yeah, so this is a little bit of a tricky one, right? Like, it's like, this is a really short period for it to be a daily cycle low, but it is a lower low than this. So that suggests to me that this is ultimately going to resolve below these lows. That would be the expectation. And this is day 37 of this whole thing. And if we look at the weekly cycle, that probably is going to be telling, right? So you have this high here, and below 151, what is that? Below 152 essentially makes this a swing high, and it's a lower high than this. So, you know, you might expect that is not what I was looking for. So you might expect that becomes a lower swing high than this one, which is a lower swing high than this one, which is just another way of saying we're in a weekly downtrend. So that's the update on natural gas, and also a quick review of LNG, which is Cheniere Energy. Thanks for watching.